Hello, Class 9. Welcome back to another session of Commerce class. This is your Avjit sir, and today I'll be presenting you the topic banking. Introduction. Banking is an important branch of commerce, and banks are essential commercial institutions which facilitate trade. Banks occupy an important position in the modern business world. No country can make commercial and industrial progress without a well organized banking system. By providing facilities for deposits, banks encourage the habit of saving and channelize them into productive uses. They provide facilities for safe custody, investment, and transfer of money. Banks provide both short-term and long-term finance to businessmen. The credit policy of banks determines the level of economic activity in the country. So thus, banking is a institution that facilitates trade. Trade means whatever we sell and purchase in the market. So without bank, it is impossible to do business or trading, where it requires a huge amount of investment. So this investment is actually provided by the bank through loans, and the bank charges a high rate of interest by providing loans to the businessman. It also facilitates to deposit money. Now when we deposit money, they give us a certain rate of interest. But when they lend money to the borrowers or to the businessmen, they charge us a huge amount of interest, and thus they gain a lot of profit. They also provide facilities for safe custody, investment, and transfer of money. Banks provide both short-term and long-term finance to the businessman. So therefore, without a proper banking system, no country can make commercial and industrial progress. So, we have to have organized banking in order to make a commercial and industrial progress. Meaning of bank and banking. A bank may be defined as a company which collects money from us in the form of deposit. So they collect money in the form of deposit, and this money which they collect from the public is given or lends to the borrowers. Now, according to the Banking Regulation Act 1949, banking means the accepting for the purpose of lending or investment. So the bank takes the money from the public and it gives or it lends to the borrowers, where this money is used by the borrowers for investing in their business. Of deposits of money from the public, repayable on demand or otherwise, and withdrawal by check, draft, order, or otherwise. Now, banks are sometimes described as dealer also in money and credit because bank accept deposits from public and lend money. When a bank accepts deposit, it purchases money at a certain rate of interest. So when we deposit money, bank provides us a particular rate of interest, which is minimum. But when this money is used by the bank by lending to the borrowers, they charge a huge rate of interest and thus they earn a huge amount of profit. So when it lends money, it sells money at a higher rate of interest. The difference is its profit. Definition of bank. Now, according to Kingsley, bank is an establishment which makes to individual such advances of money as may be required and made and to which the individual entrust money when not required by them for use. So it is an establishment where the bank provides money to the public, to the borrower when they are in need. Types of banks. Central bank, commercial banks, industrial banks, exchange banks, agricultural banks, and post office savings banks. Let's try to understand one after another the different types of banks. Central bank. The central bank of a country serves as the leader of the banking system and the money market. Every country has a central bank which regulates money supply and credit with the help of the government. It exercises supervisions and control over all other banks in the country. The RBI, that is Reserve Bank of India, is a central bank of our country. It acts as a banker's bank. It carries out the country's monetary policy. It occupies a central position in the banking system of the country. The central bank, which is in our country, is RBI, Reserve Bank of India, and it occupies the central position in the banking system of the country. It is also known as Banker's Bank because it serves as the leader of all the banking system. So all other banks are under the Reserve Bank of India and it is regulated by the central government of India. So how much money it will be supplied is totally controlled by the government of India. So we can tell that the central bank is the leader of the banking system and the money market. Commercial banks. Now these are joint stock banks which receive deposit from the public and business firms. They also provide short-term and medium-term loans to customers. Now these banks carry on all kinds of banking functions within the framework of Banking Regulation Act 1949. So commercial banks are classified into broad categories: scheduled and non-scheduled banks. Now these scheduled banks are those included in the second schedule to the RBI Act. Now commercial banks not included in this schedule are non-scheduled banks. Now in India, commercial banks are owned and controlled by the government, private businessmen and foreign businessmen. SBI, State Bank of India, and Bank of Baroda are examples of private sector banks. SBI is the largest commercial bank of our country. So, State Bank of India, Bank of Baroda are some of the examples of commercial bank. These are actually joint stock banks that receive deposits from the public and business firms. It also provides short-term and medium-term loans to the customers. Now, when they give loans to the customers, that is short-term as well as medium-term, then in return what they earn a huge rate of interest or profit. So the examples of commercial bank is State Bank of India and Bank of Baroda. Industrial bank. Now these banks provide finance to industrial concerns for medium term and long term periods. So they give finance or they assist financial help to the industry for medium term as well as long term periods. They also purchase and underwrite shares and debentures of industrial enterprises. They also provide managerial and technical advice and assistance to industries. These banks are also called development banks or development financial institutions. Industrial Development Bank of India (IDBI), Small Industry Development of Bank of India (SIDBI), Industrial Finance Corporation of India (IFCI) are examples of industrial development banks in our country. Now, each state in India has its own state financial corporations. Industrial banks plays a vital role in the industrial development of a country. So, these type of banks are mainly focused to give help or assist help, financial help to the industry for the growth of or development of industrial banks. So, it plays a vital role in the industrial development of a country. So, some of the examples of industrial banks are IDBI, that is Industrial Development Bank of India, then SIDBI, Small Industries Development Bank of India, and IFCI, that is Industrial Finance Corporation of India. Agricultural Bank. Now, these banks provide medium-term and long-term loans to farmers against the security of land. So, what the farmers give? They give the land security, and thus bank provide loans to these farmers against the security of land. Now, they are therefore called land development banks. Now, if the farmers fail to give back their money, then the bank will take their land. Agricultural banks, rural banks, and agricultural cooperative banks provide short-term loans to farmers. So these are some of the banks that provide short-term loans to the farmers. The National Bank for Agricultural and Rural Development, that is NABARD, provide refinance facilities to all types of banks which gives loan to agriculturists. So generally this type of bank focuses on agricultural based industries where they give financial helps or loans to the farmers for agricultural purposes. Exchange banks. Now these banks provide foreign currency and other related facility to importers and exporters. So when we do business from one country to another country, then we need exchange banks. Now they buy and sell foreign exchange and specialize in financing foreign trade. They're also called foreign exchange banks. These banks also render certain services such as collecting and supplying informations about the foreign customers, remittance of funds from one country to another country. The Export-Import (EXIM) Bank of India was established in January 1st, 1982 with the purpose of promoting, financing and facilitating exports and import of goods and services. It provides expert advice, viability studies, trade informations and other facilities so as to promote the country's foreign trade and commerce. So when our goods is sent to another foreign countries, then through this we earn a lot of money or earn a lot of profit. Now exchange banks does what? They exchange the currency. So when we sell goods or when we purchase goods, we give in rupees, and this rupees is converted to the another country currencies. So that is the work of exchange banks, and this is actually done when we do import and export business, when we purchase goods from other countries or when we sell our goods to the other countries. That time we require exchange banks. Post office saving banks. Post office serve as a saving banks for the benefit of general public. Now these banks accept various types of deposits from the public and allow interest of this deposit. So when we deposit money in the post office, then the post office gives service by giving us interest on the deposits. Generally, restrictions are placed on the number and amount of withdrawal during a month. So we cannot withdraw, say, more than twice or more than 5 times in a month. There is a restrictions. So saving banks encourages saving and thrift. They collect the small savings of people but do not advance loans. So generally, we do not get loans from the post office. But when we save a certain amount of money, then we get interest on these deposits. So it encourages the weaker section as well as middle class families to save money in the post office. Hope you all have understood the lesson. We'll soon meet in our next session. Till then, take care. Thank you.